Ethereum is number 2 on CoinMarketCap ratings. Michael Saylor says there is no second best crypto. What's with Ethereum? Is it going to really kill Bitcoin? Stay tuned to the Centbee Show and you're going to find out more. Kage,
Mr. G.
see you showed up to work today.
I have to.
You've got you're proving that you're working.
Proof of work, Mr. G. Can't be proof of stake like these are the cryptos, We keep it original like it should be.
This show is not just about boring topics, this is about exciting topics.
Exciting topics, informative topics.
Yes.
So that's what we're here for, man.
We're here to talk about Bitcoin, Satoshi Nakamoto's Bitcoin.
Yeah.
Not many people know there's many different versions of Bitcoin. And we're all about what Satoshi's vision was for Bitcoin.
Straight up. Not bootlegs or knockoffs, the original one.
No, this is about digital cash, peer-to-peer electronic cash.
Straight up.
Just do it. Centbee Show's live.
It's live, yo.
Let's go. Woo! Hello, everybody. Welcome to the Centbee Show. I'm your host, Lorien Gamaroff, and my co-host is second layer, Kage Ntshingila. Kage, welcome to the show.
It's good, Mr. G.
Good. No, it's great to be here, back in the studio. Of course, we are here diligently bringing Bitcoin knowledge to the world. We are growing with our subscribers and our user count, and we're getting some very loving comments these days.
Yep.
People love the show, Kage.
They do, Mr. G. And I also think it's just our energy. Our space is pretty formal, so we bring like that laid-back, chilled element of educating our people.
That's right. This is a show that discusses heavy, serious topics, but in a lighthearted way.
Yep.
Because life is too short to be serious all the time. Really, our main focus is to try and explain to people what Satoshi's vision was for Bitcoin.
Yeah.
There are so many Bitcoins out there in the world today. We obviously talk about and see BTC on the exchanges pumping and dumping and going to new heights. There are other Bitcoin versions out there, but the particular version of Bitcoin that we are focusing on here and that we talk about is the Satoshi vision version of Bitcoin.
Yep.
Who is Satoshi? Satoshi Nakamoto, he was the inventor of Bitcoin.
Yeah.
And he had a particular idea when he created Bitcoin. He didn't want to create digital gold or some kind of investment or some kind of decentralized currency that governments couldn't track and couldn't stop. He wanted peer-to-peer electronic cash.
Yeah.
It's in the title of the white paper.
It's in the title, yo.
Exactly. And with that comes a lot of extra information that you've got to understand.
Yeah.
Because cash isn't just money in your pocket.
Yeah.
Cash has a very specific purpose and very specific rules around it.
Yeah.
And Satoshi Nakamoto thought about those rules. He thought about the traceability, because without traceability, cash is illegal. He thought about the decentralization in terms of resiliency, and also to enable things like peer-to-peer cash payments offline.
Offline, yeah.
And so that is what he wanted. He didn't want this idea of sound digital gold that nobody uses, that nobody transacts with, and that costs many dollars to transact with. He was going for cash, something that could help the majority of people on this planet, not just the elite few.
Yeah. People like me and you, So, yeah. Welcome to the show that actually sticks to the true protocol, yo. Just remember to check out the app on the stores, yo. Mobile money on fire.
Mobile money on fire.
On fire.
Gonna get some fire emojis in here, Kate. Cool, yes, okay. Today the topic is, did Ethereum kill Bitcoin? Just quickly, what is Ethereum?
Yeah.
It is another blockchain that was created a bunch of years ago. And the idea around Ethereum was to try and fill the gap that Bitcoin left behind. Because people involved with Ethereum wanted a blockchain that wasn't just about transactions and payments. It could also do all sorts of other interesting things, specifically running contracts and doing business functions without having a person involved or an intermediary or something like that. And so a lot of people think that Ethereum can do way more than Bitcoin can do. And what we want to do now is we want to break that down. We want to talk about Ethereum and what it's for, where it comes from, and is it really a competitor to Bitcoin?
Yeah.
Is it true that Bitcoin can't do all the wonderful things that Ethereum promises to do?
Yeah.
Or is Ethereum just another redundant blockchain that has no purpose in this life because we've got Satoshi's Bitcoin? Well, the answer isn't that simple.
Yeah.
And we're going to try and break that down in the show. So stick around and you're going to learn all about Ethereum and how it relates to Bitcoin and whether it makes Bitcoin redundant, whether or not it has killed Bitcoin.
Yeah, Ms. G, we need to actually tap into the history, like the origins of it. Who was involved in it? Where does it come from?
Yes, so very importantly, what happened with Bitcoin is that after a few years of Bitcoin being around, people started having an idea about Bitcoin that wasn't actually the intention of its creator. In other words, what they focused on was this decentralization aspect of Bitcoin.
Yes.
And they thought that Bitcoin could only be valuable and could only be useful if nobody can control it. And that means governments, as well as miners or just individuals.
Yeah.
And so this whole narrative crept in, and this is something we talk about all the time on the show, because really this is the main important topic of the show, is Bitcoin, and why do we have these different versions, and what is Satoshi's vision. So the people behind Bitcoin, the communities behind Bitcoin, what they wanted to do was they wanted to bring more cypherpunk aspects into Centbee. Into Bitcoin.
Actually, this sounds like what we were talking about in the previous episode about Bitcoin and cypherpunks.
Well, what they wanted to do is they realized that as the blocks grow bigger with the transactions, as Bitcoin is used more and more, it means that if you want to run a node, and what they call a full node, where you don't actually run mining on that node, you just have the blockchain, they realized that if blocks are allowed to just grow as big as the markets want, it means that less and less people are going to be able to run nodes on their computers. And when we talk about computers, we're not talking about these big mining machines. We're talking about those little Raspberry Pis or little laptops or little PCs stuck somewhere that you just want to run a blockchain. Because that idea that if you have the blockchain, you can verify your own transactions, and that means you don't need to rely on anybody to verify those transactions. They realized that a very important thing then is that we mustn't allow the blockchain to grow too big. So one of the first and most important things that people did to move away from Satoshi's vision for Bitcoin is they said, let's keep the blocks small. Now, early on in its history, Satoshi Nakamoto implemented a 1 megabyte cap on the blocks. And that was really just to stop the spam that was really happening on the network before Bitcoin had value. What the community around Bitcoin did, they said, let's keep that block size cap. Because if we only allowed 1 megabyte of transactions to come through every 10 minutes, then it's going to be easy for somebody to have a fairly smallish hard drive.
To download it and
download the 1 megabyte every 10 minutes. I mean, that's not going to break anybody's hard drive. But in doing that, it meant that they hobbled Bitcoin. They made it impractical to use because of the extraordinarily high fees that we now see occurring on Bitcoin. Not only did they do that, but there were a whole lot of features that were built into Bitcoin. Things that are called opcodes. Or in terms of the way Bitcoin works is that you can write little scripts, in other words, little bits of code that can determine how money is moved and how it's spent on the blockchain. And what they saw was that there were a lot of different functions in that blockchain script, the Bitcoin script, that they didn't need. And so they started removing a lot of the features out of Bitcoin. And so what we have now is that we have BTC, which is this blockchain, which everybody calls Bitcoin, and it has small blocks, 1 megabyte blocks, and it has a lot of the features disabled. Now, before Satoshi's vision came on the scene, which was only at the end of when it was 2018 or so, in 2015, Vitalik Buterin, who is one of the co-founders of Ethereum, wanted to use Bitcoin to be able to do all these interesting things that Satoshi Nakamoto added to Bitcoin. He wanted to create scripts that could do all sorts of interesting things, what have now come to be known as smart contracts. And so he looked at the Bitcoin blockchain and he said, well, the Bitcoin blockchain, I can't use this anymore because the blocks are too small, the fees are too high, and the developers have disabled a lot of the features that Satoshi Nakamoto put inside the blocks, inside of the blockchain. And so he said, I can't use this anymore. Let me create an alternative blockchain that can now do all these cool things that Bitcoin was able to do when Satoshi created it.
Because I wanted to say, Mr. G, I mean, with our understanding of the blockchain, we know that it's actually quite capable of far more than we already understand. So with Ethereum, it was essentially trying to solve a problem that's already solved.
Well, at the time, it wasn't solved.
Yeah.
Because the blocks being small, the fees being high,
Yeah.
and also the misunderstanding around the Bitcoin script. He thought that he needed a new blockchain. Now, what were those misunderstandings around the blockchain, the script that Satoshi Nakamoto put inside the blockchain? One of the issues when it comes to building software or programs on a blockchain, what you need to be able to do is to be able to write code and logic into a transaction so that you can then do these smart contract type things. And for so long, people have thought that the Bitcoin script that Satoshi used, which is kind of like a language called Forth, which is very simple and doesn't have features that makes it easy to create logic inside a Bitcoin transaction. Specifically a computer term which is called Turing complete. And Turing complete just means being able to have conditions inside the code. So you can say, if this, do that, else do this, and then you can loop it around. You can say, do this and do this again until something else happens. You can't really do that in the native Bitcoin script that Satoshi Nakamoto implemented inside Bitcoin, that Forth-like language. But what people didn't realize at the time, but now we're starting to understand, is that, yes, the script inside the Bitcoin transaction isn't a Turing complete language, but the way Satoshi made Bitcoin was that you could then link different scripts together from different transactions and then be able to have the same kind of functionality as you would in a Turing complete system by being able to link transactions and being able to chain transactions together. Nobody understood that at the time. And so Vitalik Buterin and his colleagues, there was Gavin Wood and Charles Hoskinson and Joseph Lubin, they all said, let's go and build a new language on top of this new blockchain. And they called that the Solidity language. And then they also created something called the Ethereum virtual machine, which would run that language on top of the blockchain, so that they could now have these Turing complete smart contracts running on the blockchain. So when Vitalik and his colleagues started off with that, at the time they realized that Bitcoin was now something that couldn't be used because of all the changes that the developers made. They wanted to create this new blockchain. And till this date, most people think that Ethereum is the only blockchain that can run all these different smart contracts and Bitcoin cannot.
But if you check with G, that's how it's also presented. That's how it's sold. Because if we look, there hasn't been much innovation when it comes to BTC. Like, it's just speculation, charts, prices and stuff.
In fact, the reverse of innovation, they've taken away innovation.
Exactly.
By limiting the script capabilities, limiting the block sizes, going for that maximum decentralization. So it's been a regression.
2,000 years later.
Definitely. There's no progress there. But if you check Ethereum, it's more them trying to push it as a protocol that allows all this innovation to be happening, not understanding that it's also a concept borrowed from the original protocol.
That's right. Every single thing that Ethereum can do today, we've now realized was already built into Bitcoin from day one. And the only reason we don't know that is because people haven't understood Bitcoin and are only now starting to get it and figure it out. It's been a long process, but of course now people aren't even looking at Bitcoin anymore because they look at BTC and they say, well, that's it. BTC is just going to be the store of value, they call it. It's just going to be the small block size, no scripting. It's got no value apart from being a digital gold.
Don't use it.
So let's go and create other blockchains that we can do all these other cool things with. And that's why we have so many different blockchains today. All because the people who are developing and working on Bitcoin once Satoshi Nakamoto left, they didn't understand anything that Satoshi was trying to achieve. They basically neutralized or neutered Bitcoin and turned it into this dog that just can't do much.
But Mr. G, we have the white paper. Are you telling me these guys didn't go through the white paper?
Well, remember, these are cypherpunks now. And there were things in the white paper that they don't like. The traceability, of course, and also the fact that this system is supposed to scale massively and become commercialized. That's not what BTC want, because they think as soon as it's commercialized, it's going to become regulated and controlled. So they're trying to move away from that, hence Ethereum. And of course, there are other blockchains like Cardano and Solana, and they're all trying to do the same thing, NFTs and all that kind of stuff. But Ethereum, because it's the oldest, it's been around the longest, it also has a massive community of people around it. One of the people who co-founded Ethereum is Joseph Lubin, or Joe Lubin, who people often say I look like, but I prefer being associated with Woody Harrelson.
Oh, yeah.
The Woody Harrelson of Bitcoin.
But I keep saying you're the handsome version.
Thanks, buddy. Thank you very much. That's why I keep you on the show, Kage.
Nah, that's not ass kissing, Mr. G. That's real.
So Joe, he's got a company called Consensus.
Yeah.
And what Consensus are doing is spending an enormous amount of money. And where do they get that money? That's from the Ethereum pre-mine, of course, that when Ethereum was launched, a whole lot of Ethereum was kept back for the developers and by the founders. They kept all this Ethereum and they've been selling it over the years.
Yeah.
Millions of dollars every year, talking about $100 million now. I think that's what it's up to now. They budget to develop technologies that leverage Ethereum, developer grants, advising and consulting. Consensus is all about trying to build out an Ethereum ecosystem and give it all the tools it needs to be able to really leverage Ethereum. The only problem is Ethereum doesn't work.
It doesn't.
Fees are high and all that, and of course we can get into the problems.
Yeah.
But that's really just it in a nutshell.
Yeah.
Ethereum exists today because Bitcoin was neutered. And it was turned into something that is now no use to anybody. Yeah. At least BTC. Yeah. But of course, we all know Bitcoin SV is out there, and Ethereum better watch out, because the Bitcoin SV can do everything Ethereum can do, just cheaper and better.
Definitely. So yeah, Ms. G, we've spoken about some of the differences between Bitcoin and Ethereum, but we need to distinguish the key differences between them. And what are those?
Yes, we did touch on it. I mean, one of the important things around Ethereum is that they have this thing called the Ethereum virtual machine, and that's separate from the blockchain, and that's where you run your contracts. The difference is also in the language. Ethereum developed its own unique language called Solidity. This was one of the things Gavin Wood did, one of the co-founders. What this kind of looks like is sort of like JavaScript, a more natural higher level language that developers can use to be able to just write the kind of logical sequences that they need inside the program, and then that gets compiled and executed on the blockchain. So the differences there is that Bitcoin just has the blockchain with the Bitcoin script inside it. Ethereum has the virtual machine, which uses Solidity to build those contracts.
So, Ms. G, sorry, with that being said, it already sounds like Ethereum is far more complex. You're saying they have like their own scripting language, basically, that's dedicated to them.
Yes, it's a higher level language. And Bitcoin has a kind of low level scripting language, which is like Forth. And so it's very hard to develop scripts inside Bitcoin. But that's not a problem now, because of course we've got tools like Scrypt. And Scrypt allows you to use JavaScript and TypeScript to be able to create very cool scripts, very cool programming that has all the stuff that you need in it, all the conditions and stuff. And then what that does is it compiles it down into Bitcoin script. Then you don't have to worry about coding that script by hand yourself, which can be quite complex. TypeScript just makes it so much easier.
Super easy.
And that's why we always recommend, you want to write smart contracts, then just go and check out Scrypt. If you know TypeScript or JavaScript, then you can just go ahead and create Bitcoin script really simply. Solidity is a relatively new language, and it has problems in it and all that. So the important difference there is that there is a language that is used, a high-level language, running on a virtual machine that is used to create the smart contracts. Bitcoin uses Bitcoin script, but you can use tools like Scrypt to then build those scripts, complex scripts, and then have them built down. So that's the first difference between the two blockchains.
I think that also distinguishes like what type of future is headed like for both protocols.
Yes, and then the other difference, a very important difference, is what we call the consensus mechanism. And now with Bitcoin, famously, there is proof of work. And proof of work is what miners do. They process hash puzzles and they verify the transactions. They put them into blocks. And then once they've solved a puzzle for a block, they then broadcast that out there. That's the proof of work mechanism. That requires large mining machines. and lots of investment into infrastructure. What Ethereum now uses, although they did start with proof of work, but they've switched over to what's called proof of stake. And that's a very important difference. And proof of stake doesn't work like mining, where you need to have big machines. What happens is, if you want to be a validator instead of a miner, then all you've got to do is you've got to stake Ethereum. You've got to go and deposit Ethereum into an address that gets locked. And then what happens is you can then earn rewards by creating blocks based on how much you've staked on the network.
Okay.
So, for example, let's say you and I want to now become validators on the Ethereum blockchain, and you go and deposit 1,000 ETH into an address, and I deposit 2,000 ETH into the address. Now what happens, depending on the ratio of stake, I will then statistically get more blocks validated. Everyone will deposit who wants to validate Ethereum into these addresses, and based on the amount that they've staked, they will then, on some kind of ratio, they'll be able to earn rewards. The whole idea around proof of stake is that, well, now it must be better, right? Because you don't have these huge machines munching electricity, creating carbon into the environment. Sounds a lot greener, and that's why it was a big deal when Ethereum said, right, we're going to move to proof of stake, because a lot of people who have issue with Bitcoin, they say, we like Bitcoin, but the proof of work mining is just too awful. You know, we don't want to have a system that consumes cities worth of electricity just to mine a bunch of transactions. And so for those people who are conscious of that, think that's a problem. Of course, it isn't a problem when you use Bitcoin the way it's meant to be used.
The original.
But they thought that proof of stake would make the whole validating process a lot greener and a lot more eco-friendly. So of course there was a whole lot of people who thought that would be a great idea, but proof of stake introduces a whole lot of issues as well, which we'll get into. So those are the two differences. We've talked about the scripting, talked about the consensus protocol, and then of course Ethereum doesn't have a fixed supply. Famously, Bitcoin does. It's got a 21 million Bitcoin supply. What they tried to do was implement an improvement where what happens is when you create transactions, then some of that fee that gets added to that transaction just gets burned. In other words, it gets destroyed. And so by doing that, Ether is moved out of the supply. So you don't have this perpetually growing supply of ETH.
That sounds so complex. Like, what happens to the burnt fees? They just
goes up in smoke.
Literally. Jeez, okay.
Yes. So that's one of the differences as well, the supply. And of course, they both have fees. You know, to create a Bitcoin transaction, you need to have a fee. Although Ethereum also has a problem. They have what are called gas fees. And gas fees are basically used inside the smart contracts. If you've got a complex smart contract that needs to now be processed, depending on how complex that contract is.
So for every step, probably.
Yes, for every step there's a little bit of what they call gwei, which is just a little bit of ETH. That will then be consumed and earned by the validator.
Jeez.
So they both have fees, just used in a different sort of way.
But clearly not cheaper than the original protocol.
No, well, I mean, Ethereum has a massive issue with this. This is one of the scaling issues that they are trying to solve, where fees are just going to the moon, and people are struggling to actually really look at Ethereum as a tool that can be used to write smart contracts.
How can they, Mr. G? I mean, in this sitting, I got to actually understand the fact that Ethereum is a knockoff if you were to compare it to the original protocol. So there's no way BSV cannot achieve what Ethereum is trying to achieve.
That is the whole point, is that Bitcoin SV, the way it was originally created, was that it could execute smart contracts in a Turing complete way at a tiny fraction of the cost. That really is the whole point. You say it's a knockoff, but really it's a solution to a problem that only temporarily exists while people think that BTC is the only Bitcoin.
True, I guess.
But when people realize, hang on, Bitcoin SV, the original Bitcoin, can do everything that Ethereum can do at a fraction of the cost and can actually scale, then there's going to be a massive exodus. And one of the interesting things about Scrypt as well is that it's possible to take your Solidity smart contract that you've built for Ethereum and convert it into a Bitcoin script. So if you want to, and you running smart contracts on Ethereum, then go and take all that work that you've done, all that code that you've written, and go and port it into Bitcoin SV. And you're going to be able to run all your NFTs and whatever smart contracts that you've got on Bitcoin SV at a tiny fraction of the cost, much more effectively and much more efficiently. Give it a try. You're not going to lose anything, especially since you've done all that work. Go and try it out on Bitcoin SV, and you're going to be shocked at how well it can work.
You see what I mean when I say this is the real BSV plug, guys? Mr. G just gave you like some heads up. You were plugged right there. So yeah, just try out the BSV blockchain, build on it, check out script, and also just remember to check out the app on the store, Zero. Mobile money on fire. Yeah, Mr. G, you spoke of the Ethereum virtual machine. How is that going to work, like when it comes to scalability?
Yes.
Because I'm trying to wrap my head around it. I can't.
It's not intuitive, right?
It's not.
So when it comes to validating blocks, if you were to think about Bitcoin mining, then what happens is with Bitcoin mining is the miner will go and validate the transactions, solve the proof of work puzzle, and then announce to the network that they've solved the puzzle. And all the network has to do is check the transactions in the block to see which transactions are there, check to see that the proof of work was solved properly with the little secret number that the whole point of mining is, finding the nonce, finding that little number that solves the puzzle, and then it's done. Now, when it comes to Ethereum, with this EVM or Ethereum virtual machine, what happens is that when a validator validates a block, what they're doing is they are looking at every single transaction, looking at the smart contract, going through every single line, checking to see that it all computes properly, and then they are going to propose a block. They're going to announce to the network, I've got a block, here it is, check it for me. And then all the other validators on the network, not all of them, but a randomly selected bunch based on their stake.
Stake, of course,
They're all going to then validate the exact same smart contracts to make sure that the miner, the validator, did a good job. Because if the validator didn't, or if there is some kind of fraudulent transaction or something that's gone wrong, the validator is going to get punished. But the only way that the other validators can check is they need to process that smart contract too. The delay can be if there is a validator that has much less resources, less computing power or anything like that, less network speed. And what happens now is that every one of those validators have to check sequentially the validity of that smart contract, which means that the speed of the system is always going to be the speed of the slowest validator. And so that's where the bottleneck occurs.
Makes sense, yeah.
When it comes to scalability, the system is always only going to be as fast and as scalable as the smallest machine on the network. And so it doesn't matter how powerful the other systems are, it always comes down to the smallest little validator, and that becomes the bottleneck, which is quite different from how Bitcoin works.
Completely, Mr. G. I'm even wondering like how they actually came about like this approach.
Because of the way that they have devised the system with an EVM, with these Solidity smart contracts. This is always going to be an issue with Ethereum. Now, they're still trying to solve these issues, of course.
Yeah.
It's not like they're just going to brush these under the carpet. And there are many different proposals, including a new proposal where they're going to be sharding the network. In other words, creating sections of the network that'll be dedicated to doing different blocks. The whole issue now is how can you scale a system like this? Unlike Bitcoin, it doesn't have a clean mechanism. We've got this EVM model. It doesn't seem likely that there's going to be any solution anytime soon, especially not when people start realizing that with Bitcoin SV, they can just do all this anyway without having the bother of trying to scale the blockchain.
I wanted to say that with all those proposals, we have a better one.
Yeah, I mean, one that actually works.
You know?
Yes. This is important. So not only is it the scalability of the EVMs, it's also the fees, because as those contracts get more complex, it costs more gas, which is the fees to execute those contracts.
Just on that, Mr. G, you spoke of, let's say the contract itself, the code is complex. So for every line, basically, there could be a gas fee.
Yes, that's actually how it's calculated. When you create a smart contract, it's not every single line, but it looks at it. It looks at every single bit of code and then determines a cost to execute that little bit of code.
Yeah.
Because remember, to execute code, you need processing power,
Yeah.
and a machine is out there spending electricity and CPU cycles to go and process that
Yeah.
and to execute that contract. That's why it costs a lot. It actually costs the validator money to do that, and that's just something that increases the fees. And of course, with fees, we talk about fees on BTC being high, but they're even higher often on Ethereum. Although because
crazy.
Ethereum hasn't really been used very much
Yeah.
lately, the volume isn't increasing much. It means that the fees aren't going too high.
Yeah.
You don't want that to be your solution, right?
Yeah, definitely.
How do we bring down the fees? Just stop using the thing.
Straight up, eh?
Yeah.
I mean, we have Bitcoin and Ethereum, and we need to distinguish where they both stand. Can they coexist?
Well, if you're looking at Bitcoin as BTC, where BTC is trying to be this digital gold store of value thing with no capabilities
Yeah.
apart from the transactional stuff.
Yeah.
So no scripting, nothing like that. People will say, yes, BTC is the digital gold and Ethereum is the decentralized app platform.
Yeah.
And that means when you look at them like that, you think, okay, well, yes, there must be a place for both of them. That's why people are still willing to invest in both and promote both, because they really think that there are two totally different blockchains. And it's true when it comes to BTC. BTC can't do anything what Ethereum can do.
Yeah.
But if we're comparing Ethereum with Bitcoin, when we say Bitcoin, always means Satoshi's Bitcoin, of course,
BSV.
BSV.
Mhm.
If BSV can do everything that Ethereum can do,
Yeah.
and it can do it cheaper and more efficiently and faster, then why do we need Ethereum?
I keep asking myself that question, Mr. G, because we've went through all these capabilities and features or attributes that the original protocol has, and we can go through a checklist literally and mark them off, and it passes through everything. You know, that's why we also look at it as a universal solution, like every industry. But what I don't understand, Mr. G, is how does Vitalik and everyone else overlook the fact that there's a solution already instead of you going through the trouble?
There has been a massive online whitewash trying to get rid of Satoshi's vision, because Satoshi's vision doesn't fit with the crypto vision. We always say that Satoshi's vision was for peer-to-peer electronic cash on a regulatory compliant blockchain, and that's not what crypto wants. And in fact, when Ethereum is talking about these decentralized apps, what they want to create are functions that don't have any government oversight and can't be blocked or can't be stopped. They're decentralized. They see a future for that. They want a future where code is law. Having these decentralized apps that people can use to do business activities or financial transactions, do things like loans and all sorts of things. They want to create a world where there are no interventions from people. There's no regulatory oversight. There's no law enforcement that gets in the way. If law enforcement thinks that there's a contract that maybe there's people who are transacting with each other who shouldn't be. This whole cypherpunk mentality creeps into Ethereum, and this is what people are trying to push. They think that this is what we need. Remember, the whole of crypto is talking about unaccountability and decentralization. That's what DeFi is. Another name for DeFi is unaccountable finance.
But that's already a red flag right there.
The idea of crypto is that it doesn't matter if there's a red flag. They want to burn down all the red flags.
That's true.
They don't care. As long as they can transact with whomever they like, as long as they can send money to whomever they like, as long as they can keep money and hide it from the tax man, and if they can do a financial transaction with somebody, they don't want people involved. They especially don't want government involved. They don't want regulators. And this is why they always talk about decentralization, as if it's the thing that protects them all. We've already seen with systems like Tornado Cash and Wasabi Wallet, that was just software, and the developers say, we didn't make people commit crimes with this, they did it, we just created neutral software. That's all just a smokescreen, because if you're creating a tool and the thing you can do with that tool is hide traceability of money, well, guess what? You're liable.
But you've literally built it for that.
That's what you built it for. And if somebody uses it for that, guess what? You're in trouble.
And you should be held accountable.
And that's what's happened with the guys from Tornado Cash. But it's also going to happen with the guys who are creating these dApps, these decentralized apps and decentralized finance. They think that if it's the computer doing it, then they are absolved from any responsibility. But at the end of the day, it's the person behind those contracts that matters.
It's also, I don't know, it's very naive for one to even think that they can solely give responsibility to a computer.
They're using these DeFi things and they're saying the functions are in the code, and that means if somebody uses that code, it's got nothing to do with the person who wrote that code. That famous quote from the 70s IBM, a computer can never be held accountable, therefore a computer must never make a management decision. That really speaks to the whole idea of smart contracts.
Definitely.
If you have a smart contract, that is, when we talk about these DAOs, these decentralized autonomous organizations, the whole idea there is that you can create a business or a company that doesn't have directors, and you can then code up all the functions of that business into a smart contract and then just let it execute. And then this smart contract can manage all the business decisions. And they call this an autonomous organization. In other words, an organization that just runs on its own according to the code that's been created in the smart contract.
I don't care how far we advance as human beings, that can never be a society that we live in.
You can't hold the smart contract accountable, so it mustn't make management decisions. But who you can hold accountable are the authors of that code.
Definitely.
And the Tornado Cash guys, for example, have found that out.
Yeah.
That yes, they wrote the code, somebody else used that code to break the law, but they are still accountable.
Yeah, because you essentially enabled that person to do those illicit activities. If you didn't write the code, there wouldn't be a tool for them to use.
Yes.
Yeah.
And also, I just want to bring in another interesting thing that happened with Ethereum around this. This idea that it's all about decentralization. Anything that's in the smart contract, that's the rule, and that's the law. There have been many hacks. People create these smart contracts. It's just code after all, and there can be bugs in the code.
Definitely.
And so much money has been lost because of these contracts. People writing bad contracts that somebody found a loophole in and then managed to siphon off all the money. Because what's interesting about a contract is that you can actually deposit money into that contract, and then depending on conditions, that money can then be paid out. But what hackers have done in the past is they've found those contracts and been able to drain all the money off those contracts because of some bug in the software. And the way that crypto is that if you lose your keys, well, that's too bad.
It's gone.
If somebody steals your coins, that was your fault. You shouldn't have been an idiot and let your keys get found.
Imagine your bank telling you that.
Right. Well, that's the whole idea of decentralization, and not your keys, not your coins. And so what happened with Ethereum was that there was a major hack a couple of years ago.
I remember that,
It was a big issue because there were a lot of very prominent people in Ethereum who lost money. And there was this big debate. What do we do? Do we go and roll back the blockchain so that we can get everybody's money back and foil the hacker that way? Or because of decentralization and because nobody's in charge, do we just let Ethereum carry on? And sorry guys, too bad, too sad. And there was this major debate, and eventually the most important prominent people in Ethereum said, we're going to do it. We're going to recover those coins. We're going to roll back that blockchain, and we're going to undo the problem.
When we speak of BSV, the original protocol, like we speak of your coins can be recoverable. So when you speak of Ethereum, it sounds like they're trying to borrow from the original protocol that your coins can be recoverable.
They didn't have that mentality. Remember, we've been talking about Bitcoin, and the way Satoshi wanted it was that it was a regulatory compliance system. And if there was anything illegal happening on that blockchain, if terrorists were using it, if money launderers, or if you just got robbed, then you can go and recover those coins. You can seize the money from the terrorists, or you can freeze the money from the money launderers. And so this is what Satoshi Nakamoto created, a system for that. That's why we have proof of work.
It's in the system,
it's
I'm saying.
baked in. But remember, most people don't understand what Satoshi's vision was. Very few people understand how Bitcoin was developed to solve these sorts of problems. And so the crypto mindset was still very prevalent in Ethereum. In fact, it's still very prevalent today. If a contract gets exploited and you lose money, well, that was your fault. Nothing you can do about it. The train keeps moving. And that's the crypto mindset. Is that, and they have this phrase, code is law. In other words, whatever is written in the code, that's what happens. And if money gets stolen, well, it was because of the code in the contract. That was the rule, so it wasn't stolen. It's a loophole that you found, and it was there, and so you did nothing wrong. You didn't break anything. You just executed the contract the way it was written. So guess what? That money is rightfully yours.
Wow.
According to them.
Wow.
Because that's how they think.
Yeah.
But this brought up that issue of like, whoa, hang on. If money is getting stolen here, surely we should be able to somehow recover that. And of course, this was a huge debate because it's so entrenched in their minds that code is law and it doesn't matter what happens, you can't do anything to mess with the blockchain. They had this massive debate, and in fact, Ethereum even split into two.
Oh, yeah.
Because you had proponents on one side saying, we can't stop the train. What happens, happens. The code is law.
Yeah.
And so we don't want that blockchain to be rolled back. That was just a minority bunch of people.
Yeah.
And what they had to do was then create a brand new Ethereum version with the code carrying on, with the hacker still having all the stolen money.
Yeah.
Because they said, well, that's how it is. You guys are going to have to change your symbol to ETC. And that's exactly what happened with Bitcoin, remember?
Yeah, really?
With Bitcoin, people wanted to change Bitcoin. They wanted to keep the blocks small. They wanted to bring in segregated witness. They wanted to make changes. They wanted to morph Bitcoin into something that suited their cypherpunk principles. And because they were the prominent people, they were all the guys with all the social media influence followers, they were all pumping. They get to keep the BTC symbol.
Makes sense.
And the blockchain that remains steady and stable on Satoshi's vision, sorry, you guys are the minority fork, so you guys are going to have to get a new symbol. And that's why we have BSV.
Yeah.
BSV stayed true to Satoshi's vision and has not deviated from the protocol.
Literally.
BTC has completely changed, but it always comes down to a popularity contest in these things.
Yeah.
Where all the popular guys in Bitcoin, they are all on the BTC chain. All right, guess what? That's Bitcoin, everybody. So the whole story has played out on Ethereum as well.
It's quite funny, Mr. J, because if we're going to be talking numbers and all, the true numbers that we should be looking at is the transactions. And you can only see that on BSV.
Yes, transactions and fees.
Yeah.
Because if your blockchain can do a lot of stuff, but it's too expensive to use, what's the point?
What's the point?
You don't need it.
Yeah.
So yes, it's going to come down to it at the end of the day, which blockchain can deliver something in a cheap, convenient, reliable, efficient way.
Yeah.
If you can't have that, you've got nothing. You've just got an experiment.
It really is, man. I feel like all these cryptos out there, Ethereum and all, are experiments.
They are.
Just to delay the true adoption that is really needed. But I think after a while, the veil is going to fall off and people are going to actually realize which is the true protocol.
Yes. Yeah. And the only reason why it's taking so long is because the crypto mindset, this mindset of being able to create a system that is untouchable, ungovernable, that disease, that cancer has taken over.
It's a cancer for real, man.
And it can't be shaken. That's why people are not going to look at BSV, because they're saying we want our cake and we want to eat it.
Yeah.
We want to have decentralization and untouchability and unconfiscatability. But we also want cheapness and we want reliability. And guess what? That doesn't happen when you have this decentralization mindset. But Satoshi Nakamoto figured it out.
Yep.
And everyone out there in the world is trying to figure out what Satoshi has already figured out. They are all just years behind. Plus, they don't have the chops that he has. They don't have the experience he has and the education that he has.
Yeah.
And so they're all going to be floundering around for years to come with their different blockchain experiments. And meanwhile, Bitcoin SV is going to be out there eating their lunch, because when they turn around and they start saying, right, now we want to start bringing this to commercial enterprises or to businesses, what are they going to see? They're going to see that Bitcoin SV has already been there and is already catering to all these large entities. And every one of these blockchains eventually is just going to disappear into the ether along with Ethereum. It's going to be a one blockchain world.
Yeah, I mean, when we're talking proof of stake, we're talking going green, less intensive factories with computers and stuff. It's just simple on your laptop. But what are the issues regarding that?
Yeah, it does sound cool, doesn't it? All you've got to do is you don't even have to have a computer, right? You can just go and deposit coins into an address.
That's it.
Yes, so this is really the thing that now surely must be a better system than Bitcoin.
Yeah.
If Ethereum can do smart contracts and it can also just do payments, remember it's just ETH flying around, and it has a proof of stake blockchain where you don't need mining operations that consume electricity. Surely this is a better alternative.
It really sounds so.
Sounds beautiful.
Yeah.
The idea of proof of stake compared to proof of work, if you think about how proof of work works, what we have is we have an industry of miners who are incentivized to try and find ways to be able to process the hashing puzzle in an efficient way, to be able to effectively and efficiently use electricity without using too much. They have to have staff and they have to have operations that run effectively and efficiently. They have to constantly innovate to be able to outcompete everybody else.
Definitely.
Because at the end of the day, yes, one of the most important factors is the cost of electricity. And so miners will always go and find places that electricity is
Cheaper, yeah.
But that's not enough. You still have to put work in. You have to figure out, how can I build a better processor that can now more efficiently process this hash puzzle? So this is what they have to do. They have to constantly bring innovation. You have to innovate to be able to compete with everybody else. It's not enough that you just go and buy a whole bunch of mining hardware and you set it up, you plug it in, and then you sit, and now that's it, your income just comes in. No, you have to constantly be figuring out, how do you improve the system, because your competitors are going to do that, and then maybe a competitor is going to find cheaper electricity. Now what are you going to do? Are you going to give up? No, there's so many ways that you can improve the system. And so having a proof of work system implies that you're now going to be bringing innovation into the system. You're going to need to find better ways of doing the mining operations, and that drives innovation. It keeps people thinking creatively and innovatively, and this is why proof of work is something that drives innovation. But also with proof of work, it means that anybody has the ability to come into the system, and by having a better idea or being able to develop a better microchip, maybe they are able to have a much more efficient staff, and they have processes that are much more effective. Anybody can come in and start competing. It's not just about how much money you have.
Because it sounds like with Ethereum, you got to be a big boy with big bucks.
That's it. When it comes to proof of stake, all you're doing is you're taking money that you've got that you're not using, and you're dumping it into an address somewhere or into a contract, and you're just now sitting, and there's nothing more to be done. And if you have the highest stake, guess what? You're just going to keep earning and keep earning, and the more you earn, the bigger you'll grow, and the bigger you grow, the more you earn. Eventually you have all this wealth centralization, where the bigs get bigger, and there's no work involved. It's just about how much money can you go and put there.
You got to have the bucks first of all.
Yes. So this is the thing, is that now there's no work involved. There's no innovation involved. You just need to be able to get enough money together to plonk it into a smart contract, and then you just sit. There's no development. There's no work
So
involved.
they truly believe like proof of stake as the way Ethereum is going to succeed.
They think that they've solved one problem and created another.
So much time has been put into building these redundant apps at the end of the day. All these resources should be focused on the BSV side.
There's definitely no innovation needed when it comes to this. It's just about who has the biggest bags. And this is an elitist game. And if you think you can just come in and, start earning a little bit of money, you're just fooling yourself. So really, proof of stake is an elitist game. It's all about who can go and lock up funds, and the largest amount of funds, and that's how you can keep earning. So it's got nothing to do with innovation. It's got nothing to do with work. It's just about how wealthy you can be. And of course, the big get bigger. That is just the natural state of the system.
Previously, there was a comment that we mentioned in the show. Actually, one of our audience, you mentioned that, BSV is not for investors. It's more for innovators. And he was laughing at that. And I'm like, it clearly shows like there's quite a lot of people that don't understand the true protocol.
Yes, they don't look at Bitcoin as a utility platform that can be used for things. They look at it as an investment vehicle. Yes, and so of course it's got nothing to do with that. BSV is an entrepreneur tool. It's a way for you to be able to provide value to people. It's not something that you can just buy and sit and hold, and that's just the hodl mentality of all of crypto. Either it's trading and flipping, or it's just hodling. Bitcoin is a capitalist system. because it's about innovation and creating value for people.
Yeah.
And if you create value for people, you can earn value. You can earn income from that.
Yeah.
Whereas proof of stake, there is no entrepreneurship here. There is no innovation. It's just about who's got the most money, and those guys stay big and they stay the winners.
So yeah, I mean, we've been seeing in the news that Ethereum is now probably going to be considered as a security. But we need to understand what is a security and the characteristics that a security holds.
Yes, proof of stake, it's not just about validating. It really does change the nature of Ethereum. There's been this question about Ethereum and Bitcoin and all these other cryptos. Are they commodities or are they securities?
Yeah.
And simply put, if we just look at the difference between a commodity and a security,
Yeah.
a commodity really is just a thing that you can use. Either you can consume it or you can use it in buildings or just for creating things. It's a good. Something like wheat or oil, gold. It's something that can be used and consumed. It has value. You can invest in commodities.
Yeah.
People often invest in gold or wheat or oil. They think that maybe the prices are going to fluctuate. But all it is just a good that people can go and either consume or trade or use to develop other things.
Yeah.
And the difference between a commodity and a security is that a security is more like a financial instrument. In other words, something that to invest in that can generate income based on the work of others. There's a whole list of things that can be used to define what a security is in comparison with a commodity. Something called the Howey test. And the Howey test says that if what you're investing in is a common enterprise, so in other words, something that lots of different people are involved with, all working together. If you're investing money into this and you expect to receive some kind of profit based on the effort of others, investments in stocks or other financial instruments, bonds and that sort of thing, people are looking to invest in those so that they can generate income based on those criteria.
Definitely.
Effort of others, is it a common enterprise, are you investing money, and do you expect a profit, of course.
Yeah.
And so when we look at Bitcoin, we see how Bitcoin really fits much more neatly into the commodity bracket. Because at the end of the day, when you buy a Bitcoin, it's not that it's an investment into a security where you are now going to be holding that Bitcoin and hoping that others are going to be able to increase the value of that Bitcoin.
Yeah.
It's not this common enterprise, everybody working together to try and increase the value of your Bitcoin. A Bitcoin is a commodity. It's a thing that you use to do stuff with.
Yeah.
We always talk about Bitcoin being a utility blockchain.
Definitely, yeah.
If you want a Bitcoin, the reason why you want that Bitcoin is because you want to use it to create a transaction, maybe to pay somebody, or to use it in a supply chain, to track goods through a supply chain, or to write logging to the blockchain that's immutable.
Yeah.
And so Bitcoin is considered a commodity because it's something that you buy to use.
Yeah, there's utility there.
Yes.
Yeah.
Now, when you are looking at Ethereum, because of this whole nature of it being a proof of stake blockchain, where when you are staking your ETH, then what you're doing is you're investing that, you're putting money into something, which is this common enterprise. You're expecting people out there to be using the system so that your stake can now earn income. In other words, can generate rewards based on validating. And so it looks much more like a security. And this is now the battle that's being raging around Ethereum and other cryptos, of course, with the what's called the Securities Exchange Commission in America, obviously other securities regulators. Everybody's trying to figure out, where do these things fit? Because if Ethereum is considered a security, guess what? It needs to be regulated like a security.
Yeah.
And you can't just sell ETH if you're selling a security. You can't deal in ETH if it's considered security, because there are very strict rules around that.
Yeah.
You have to have all the right licenses in place. There's a lot of rules and regulations and things that come into play. And of course, most people on Ethereum have never even considered that. They've been looking at Ethereum as a decentralized crypto. And so everybody who is pumping ETH, they don't look at it as a security. And so this is the big issue that's happening in the world now, is what is Ethereum? Is it going to be considered a security? And if so, there's going to be a lot of people who are in trouble. because now there have been people dealing with ETH and they're not allowed to do that. You don't have your license. You're an unregistered securities broker. So it's quite a big deal. And of course, with proof of stake, it just makes it so much more likely and fits so much better into the securities bracket that the people in Ethereum, they've got something real that's coming their way, something big, big issue, and they better resolve this. This is really something that's hanging over the heads of people who are involved in Ethereum, and people who are engaged in it and dealing with it and working with it. And it remains to be seen how it's going to be judged. Obviously, this is still happening right now. There have been some regulators saying Ethereum is a commodity, some saying it's a security. So there hasn't been any definitive statement about what it is, but you can be sure that if it is deemed to be a security, there are going to be a lot of people who are very concerned because of the things that they've been doing with Ethereum.
I've picked up that actually in the crypto space, when these guys speak of decentralization, for them it's like being non-regulated.
Yes.
Yeah, it's untouchable,
ungovernable,
off grid. It's always confusing because on the BSV side, which is the original protocol side, when we speak of decentralization, we speak of miners, we speak of entities that are visible. We don't speak of these cypherpunk ideas of you downloading a blockchain on your computer.
Yes, that's right. That's been the mentality. And that's why all of crypto is really heading for a lot of pain when regulators start catching up to all what's been going on. And really, a lot of these people in crypto think that they're safe, because they've been sold the lie that everything they're doing is anonymous.
Stealth.
Nobody knows what they're doing. Nobody can confiscate their coins. Nobody can see their transactions. But one of the important things about blockchain is that you can't hide anything. It's all there. It's all traceable. Even privacy coins like Monero, those can be traced. And so this is going to be a big, scary wake up for a lot of people involved in crypto. Going back to Ethereum, though, it seems that there's going to be a big, scary wake up in Ethereum when people realize that there's nothing that can be done to solve the problems in Ethereum. And really, the best thing to do is to just look around and see what blockchain can do everything that Ethereum can do. There is only one blockchain in existence, and ironically, it's the first one that was ever created. Bitcoin, Satoshi Nakamoto's Bitcoin.
Straight up, the original.
The original. Of course, BTC's failed.
Like I always say, Mr. G, for me, it's the only blockchain.
It's the only one that has a future.
Yeah, because the rest are bootlegs and knockoffs. Let's say if we didn't have, Satoshi releasing the white paper, then these guys, would they have produced Ethereum? Would Ethereum be there? Would
No.
BTC be there? Hence, I say it's a bootleg idea from the original. Anyway.
That's right. Yeah, so if you guys are looking for a blockchain that can do efficient smart contracts, that can be cheap and reliable, then there is only one blockchain. And if you've already been coding smart contracts on Ethereum and you've got all this lovely Solidity code out there, there's good news for you. You can go and port that code easily over into the BSV blockchain using tools like Scrypt, and none of that work is wasted. And what you're going to find is a breath of fresh air. You're going to find that your contracts are going to execute efficiently every single time, fees that you won't even notice, and your mind is going to be blown and you're going to be so happy. So if you are so tied to Ethereum because of loyalty or comfort, well, get out of your comfort zone, because there's a whole world out there that you're not aware of, and that's going to completely transform your life. Because not everybody is a cypherpunk. A lot of people, probably most people on Ethereum, they're not interested in all this cypherpunk stuff. They just want something that works.
You're right, Ms. G. We'd be shocked that it's actually quite a handful of people who are pushing this narrative, but the rest of the world needs a blockchain that really works.
Yes, and guess what? There's one.
Only one.
It's Bitcoin, Satoshi's vision.
Straight up.
Check it out. You're going to be surprised and very happy.
Awesome news, guys. Centbee has been growing, and we have a company called Minute Money on the side that has been spun out, and Yeah, Ms. G, I mean, what's been happening?
That's right. Centbee Wallet isn't our only business. We do have another subsidiary company called Minute Money, which has been focusing on cross-border remittances across Africa. That business is now going to be spun out.
Yeah.
And so that does mean that there's going to be some changes within Centbee, the company structure. We're still here and dedicated to bringing you digital cash, global digital cash
Most deaf.
that can improve your life and activate your lifestyle.
We're going nowhere.
Yeah, but that does mean that there are some corporate changes and that we would like to make an announcement on that. One of the important things about Centbee is that because we are considered a crypto company, a Bitcoin SV company, every country has different licensing specifications and requirements. So Centbee has been in the process of acquiring a license. That license application is going to be moving along with Minute Money as we spin Minute Money out. But that means that Centbee Wallet now needs to reapply for the local license so that we can continue offering services to our customers. And so what's going to happen now with Centbee over the next few months is that we're going to be applying for a new license so that we can continue offering the great services that we have, specifically the shopping service where you can spend money on all the things that you love, our money transfer feature where you can send money to your bank accounts or to mobile money accounts, and then also our top-up feature where you can get Bitcoin into your wallets. So those services, because those require licenses, what we're going to be doing is just temporarily, we're going to be suspending those services in most countries. That means that if you've been using Centbee to be able to purchase things or to transfer money to bank accounts, those services won't be available to you for now as we go through this licensing process. But don't worry, we're still here and we're still going to be delivering a great wallet where you can send Bitcoin SV to anybody, you can split bills, you can use chat pay, and you can send money around with BSV. It's just the shopping and the top-ups and the money transfer services that we're going to be temporarily suspending. So we hope that doesn't inconvenience you guys too much. Just know that we are still working diligently to make sure that we cover the whole world. That's our goal, is to get Bitcoin SV into the hands of everybody. We take the rules around financial transactions very seriously.
Definitely.
We want to make sure that we don't skirt around any rules that are being put in place. Obviously, with crypto being fairly new, regulators are taking a long time to catch up and to put the regulations in place. So we just want to thank you guys for being loyal to Centbee. We've got a whole lot of loyal users out there all around the world who love Centbee and love what we're doing and give us a lot of encouragement. And we are more committed than ever to make sure that Centbee becomes your favorite digital cash wallet, bundled with great services. So thanks for being patient with us. We love and appreciate you guys.
Mr. G, we're going to be stepping into this week's user questions and feedback. Our first one comes from BSV Zer, and they're saying thank you. And our second one comes from Babel Haji, and they're also saying thanks to the show.
Thanks for watching. Gee, we live for comments, and we love your likes and subscribes. So thanks for those comments, and really just to drop us a comment if you have a question or if we've said something that you weren't sure about or you want to know more about. This is a community thing. We want to create a community around here, and we want you to be engaged in that community. We want to serve you as our community, and we really appreciate all those likes and comments. And share this show with your friends if you've got friends who are trying to understand this whole crypto space and they're getting a little bit led astray by all these fancy ass cryptos out there.
I think we should also change that, Mr. G. Let's think of share this with your friends. You must share with your mama, with your granny, with your papa, with everyone.
Yeah.
Literally should be with everyone now.
Cool. Anyway, thanks for those comments. Appreciate it.
Cool. Sure. Mr. G, I think we've come to the end of our show.
Awesome. Great. Thanks, Kage. That was a bit of a meatier episode. We not really here to discuss different cryptos. All we are interested in is Satoshi's Bitcoin. But Ethereum is a very prominent crypto out there.
Yeah.
And, we get a little bit, annoyed, I suppose you can say, when people say, well, Ethereum can do all these cool things and Bitcoin can't.
Yeah.
Well, that's just not true. The truth of the matter is that Satoshi's Bitcoin can do more than what Ethereum can do, and in a much cheaper, much more scalable way. So if you are really interested in looking at a blockchain for smart contracts.
Yep.
Complicated smart contracts that can do all these cool things, NFTs and whatever the heck else you can think of. Look at Bitcoin SV. The tools are there. The community is there. We've got the bsvblockchain.org website. There are learning materials there. There's plenty of reference implementations of wallets and other software written in multiple languages. Just if you are a coder, check out the GitHub repos from the BSV. We're definitely going to put those links in the description. Everything you need is there for you to be able to dive into the smart contracting world without all the stress and the failures of Ethereum, as well as the regulatory uncertainty. So BSV is where it's at. Satoshi Nakamoto got it right. If you want to know what's happening, if you want to be on the pulse of blockchain and Bitcoin, there's only one place. Well, there's two places, I guess. There's the Centbee Show and there's the BSV blockchain. So check it out.
Straight up. Stay plugged, guys.
Stay plugged. Kage, thanks so much.
Thank you, Mr. G.
Thanks for that show. Thanks for those questions.
I learned a lot today because, like I say, for me, it's always a learning curve. I mean, there's things I assumed I knew about Ethereum, but this was a nice unfold.
Yeah, great. Awesome. Cool, guys. Well, thanks for joining us on the Centbee Show. Please come back soon.
It's a wrap.